Hello, everybody. Welcome back to the Financial Wrap. And today we have another personal finance episode. And today's episode is titled, What is Money? So, before we get into what is money, I just want to remind you that you can listen to this podcast on Spotify, Apple, Amazon. You can watch on YouTube. And you can also find the show on Nostr. My NPub is in the description or it's on the slide if you're watching on YouTube. So the reason I want to do this episode today, What is Money, is because while it is kind of a basic concept, there are a lot of people out there that don't actually understand where our money comes from or what money even represents in the first place or why we have money. So I think that this can be a good base episode for a lot of other personal finance episodes that we might do in the future. I feel like this will be a good place to start and kind of build as your foundation. So, I'm basically just going to go through a couple different forms of money or mediums of exchange that we've had in the past, how it changes society, and maybe some good and bad forms of money. And I think a lot of people will be surprised by how little time we've actually used the current system of money that we have today. So, let's get into it. So, basically, the most basic form of a monetary system that you can have is barter. And basically, barter is where everyone has their job. Someone makes food, someone makes clothes, someone makes shoes, someone makes weapons, someone builds houses, and they all trade with each other. So I give you one loaf of bread for, or maybe I give you 5 loaves of bread for one pair of shoes, stuff like that. So it's really trade based. Typically, you can only really have this in a society that's very small, like a small village, because you can't really scale uh, a barter. Like, how would you do that in the United States? I guess, like, okay, I make bread, but then, like, who's gonna accept my bread? Like maybe I want to go get gas to put it in my car, but like how much bread is gonna? It's not really feasible. It's not really realistic to have a large scale society and be in a barter system. So we ended up moving away from this, but this is the most basic form of an economy that you can have. People trading the goods and services that they actually produce with each other. And there's no unit of account. Like there's no form of storing the energy. Like there's no money. There's no currency. There's nothing to actually represent the effort that you put into doing your task except for the finished product itself. And you have to then sell that to other people for things that you need in your life. So it's not very efficient. You can't really scale society. It's typically in small villages. And it's the most basic form of an economy. From this, we started trading basic commodities like seashells, certain stones, things like that. Uh, Basically, commodities. You could classify these as commodities. So it's kind of a representation. It's basically the earliest form of money. And basically, what people figured out is we can have one thing that measures the energy and the time that I put into my task. So that way I don't have to go sell my bread. I don't have to go sell all my shoes. I can just be paid in this unit for the shoes. I don't have to actually trade them. Because what if they don't want shoes? What if they already have enough shoes, but you still need to get your necessities? Then you can't really trade with that person. So you need something else. And we came up with just having a unit of account, basic commodities like seashells. And this was good because we could scale the economy to more people. We could trade with more people. It's easier to buy and sell your necessities. But these types of commodities aren't great because you can counterfeit them pretty easily. Like I can just go find seashells without actually doing a task that benefits society. It's hard to store seashells. Like, how do you prove that this is a seashell worth accepting, or just anything like corn? And it can go bad, so it's not very durable. It can break easily. You can't really. break shells or certain commodities into like smaller units. So if I want to divide into smaller than one seashell, that's pretty difficult. Or like it can be inflated very easily. There's nothing really stopping a seashell economy from being hyperinflated. So there's a lot of issues here, but it kind of gets us off the ground floor of just like a barter system where we have to trade with each other. Um, and it is generally a good thing that the seashells are not controlled by the government, by the way. So um, let's move on to currency. And before I start talking about different types of currency, um, some areas of the world had ledgers. So that's basically where currency comes from. Is it's a ledger, but it can manifest in a physical form as well. But basically, a ledger just tracks the money. So let's say we have a fixed supply of dollars, for example, which is not the case. But let's just imagine we live in a world where there's a fixed supply of dollars. Let's say there's $100, and a dollar is just a unit. So the ledger is 100 units because the ledger is just the total money supply. So the ledger is 100 units, and the ledger tracks time and energy basically. So I spend time and I produce energy, I put out energy to do something, then I'll be rewarded with a piece of the ledger. I'll be rewarded with dollars. And the unit, the dollar, is a measuring stick. It's a measurement. It measures how much time and energy I had to put into something so that I can redeem that time and energy somewhere else to get the necessities that I need. So instead of trading whatever I do with my job for somebody else, I can just be rewarded with a piece of the ledger so that I can redeem the energy that I gave to society at a later time. So that's really, really important to understand that money is just a measuring stick. It's just a ruler to measure how much time and energy you put in so you can go redeem that somewhere else. Pretty simple. I mean, it makes sense. And that's very important if you want to scale a society. It's very important for just freedom in general. Because today we have a lot of manipulation of ledgers. But let's just stick with currency. So currency is just a representation of a ledger. And we used the dollar. Let's go back to the dollar. The dollar used to be backed by gold, a commodity that everyone agreed was valuable. So I could redeem that dollar for gold and have real value. There was something really backing it. And the dollar would always be worth a certain amount of gold. So that way I knew that my time and energy was being measured in something that was actually valuable. So let's say if a dollar is worth, let's say $100 is worth an ounce of gold. I know that these are not real figures, but I just want to make it simple. So let's say when the dollar was created and we went on the gold standard, so just the United States pre-1971, everything before 1971, more or less was backed by something valuable. So let's say that I make $100 from my job, and that represents 1 ounce of gold. I know that my time and energy is worth 1 ounce of gold, and I can go redeem that somewhere else in the economy. So currency makes it a lot easier for us to transact with each other. It's a lot more efficient, and it's just generally a better way to run an economy than barter or shit commodities like seashells, because it's backed by something real. And the reason we use dollars to transact with each other instead of actual physical gold is because gold is it's heavy. It's not easy to divide. Dollars are a lot easier to divide. So like you can't really divide gold up into $1.50 if you want to buy like a pack of gum. Like how are you going to pay with that with a bar of gold? That's just not happening. They're difficult to store. It's expensive to store. They are more durable than seashells, which is why they're valuable in the first place. But in general, it's easier to transact with dollars than it is with gold. So we back the currency up with gold, but then transact in the actual paper that represents the gold. The dollar was just a receipt for gold. That's all it was. It was just a receipt. You could go redeem it for the actual valuable thing itself, but you transact in the paper receipts because that's easier to do than transacting in the gold. But what happened in 1971? We left the gold standard, which means that our paper receipts were no longer receipts for something valuable. They were just paper. And that might not make sense it doesn't really make sense. But the money now is there is no value to the money other than people are willing to accept it for goods and services. That's it. But now we have inflation. The government now, since 1971, well, really since the creation of the central bank, they've had control over the money supply, over the actual money itself. So the money supply has been inflating. And what that means, when there's more dollars, when there's inflation, the ledger's getting bigger. So let's say that there was $1,000 in the ledger, and I was paid $100 for my task. I now have 10% of the ledger. And the ledger is just supposed to be a measuring stick of my energy and my time, so I can go redeem that somewhere in the future at the same worth that it was when I actually did the task. So now the ledger's been inflated to 1,500 units, $1,500. But I still only have $100. Now I have less of the ledger. I have the measuring stick is smaller that I made. So basically the time and energy that I spent doing my task, part of it has now been stolen because the ledger's bigger. My units are worth less than when I actually completed the task. So I spent time and energy at a certain price, but then when I go to redeem it, it's worth less. That is a crime in and of itself, but that's where we're at right now. Whether you like it or not, you work your ass off. You work your fucking ass off, and you get rewarded in a unit that is debased by the day, by the second. You can't spend your money fast enough to get the value of it when you worked for it. So this is the dilemma we live in now, where our money is not backed by anything valuable other than nuclear weapons and violence. And how are we supposed to protect ourselves against this, really? Well, there's a couple ways. There's two main ways I would say people think of. The first being gold. So gold was what we backed our money up with in the first place. So a lot of people go back to gold to protect against inflation because the value of gold should rise with the amount of dollars that are printed into the system. And this is true, but gold isn't a very good store of value for a few reasons. We covered this in a previous episode, but gold is not easily divisible. So if you want to then spend your gold and actually redeem the value, which I assume you would want to do, or else why would you try and protect the value in the first place? That might be difficult. It might be difficult to store. It's going to be expensive to store. You're going to have to spend money to store it. To verify that it's real gold, like a lot of people buy gold and it's not completely real gold. It's not actually pure gold. Maybe it's fake. But there's a lot of risks here with gold that make it not a great protection against the fiat debasement of money. If we want to talk about a new form of money that is kind of like a digital transformation of gold, it would be Bitcoin. Bitcoin is gold in the idea that it's scarce. So actually Bitcoin is more scarce than gold. Gold inflates at about a rate of 2 to 2.5% per year, and that's new gold being mined out of the ground. But you never know. Maybe an asteroid hits Earth that has a huge gold depository on it. Gold is a naturally occurring element of the periodic table, so gold is technically infinite throughout space. But here on our planet, on Earth, it inflates at about 2% per year. That's about the rate that we can get it out of the Earth through mines. Whereas currently the Bitcoin inflation rate is 1.8%. So new Bitcoin mined per year is 1.8% of the total supply. But that inflation rate gets cut in half every 4 years. So in 4 years, the inflation rate will be under 1%. And in this way, it's becoming exponentially more scarce versus itself, but also versus gold. It's more scarce than gold. So it's scarcer than gold, which is where gold initially gets its value from. So in that way, it's more valuable than gold. It's also more valuable than gold because it's easily divisible. You can divide a Bitcoin up into 1/100 millionth of a unit, and that's superior to every other instrument you could possibly conceive of. I can send you 1/100 millionth of a Bitcoin, and theoretically it can be divided even further than that. So it is possible. It's easy to store. I can actually store it in my brain. through a private key. So if I memorize the private key, I then can store it in my brain. That's a very powerful thing. I don't need to take gold bars to the airport. I just take my body to the airport, and I'm transporting the Bitcoin through my brain. Uh, what else? I can send it at the speed of light for extremely cheap. So the Bitcoin fees right now, I believe, are around $1.30, somewhere around there. So I could theoretically send $100 billion worth of Bitcoin to the other side of the planet for $1. Can't do that with gold. If I wanted to send you $100 billion worth of gold, I'm gonna have to send it on a giant ship. I'm gonna have to send warships to protect that ship full of $100 billion worth of gold. And that's going to be unbelievably expensive. I promise you that's going to be more expensive than $1. And it's also going to take a long period of time, whereas the Bitcoin will be sent to the other side of the planet at the speed of light. So Bitcoin is this digital scarce instrument that is exponentially more valuable than gold in every single way imaginable. And it can also be used as a currency. So we can use it as a currency and as a store of value, and it's disinflationary. So it's solving every problem we have with money all in one. It's also uncensorable. The government can't censor it. It's not controlled by anybody. So your every risk you can think of is being broken by Bitcoin. It's not centrally controlled. It can't be controlled by governments. It can't be shut down. It's completely decentralized network, and it's superior in every way. So Bitcoin really is this greatest form of money ever discovered, and I think it's only a matter of time before the human race kind of realizes that. Because whether you like it or not, new technologies are always politicized. They're always fought over by the older generations, but eventually, better technology just wins. And Bitcoin is just better technology, plain and simple. So it's only a matter of time until it wins. It will win because it is better, and it will change the way that we organize ourselves in society, as does every shift in money has changed the way that we organize ourselves. Bitcoin similarly will change the way that we organize ourselves. That's pretty much where I was going to wrap it up. I just wanted to give a little recap of what is money, my thoughts on what is money. Again, I know that there's a lot more that could go into this, but I just wanted to give a quick recap of that because I feel like we can build a lot of different episodes off of this. So let me know what you think. Let me know what you think of Bitcoin. Do you think it is good money or not? Do you use Bitcoin? Have you ever used it? Let me know. And I'll see you guys at the end of the week for the weekly wrap. Thanks.